Good morning, everybody, and happy Monday. I hope everybody had a great weekend. I know it has been actually kind of a ridiculous sales time. I'm here in Chicago with a few of our agents, just working through a few things, but I thought we'd talk about, since we are starting getting ready for open enrollment, but we still need to keep steam, how do you effectively pitch a fixed benefit? I know we went through this about, I want to say 6 or 8 months ago, but it's not a bad time to go through and refresh that. So just by saying that, I thought we'd start with a pretty good quote here. It's never too late to start over. If you weren't happy with yesterday, try something different today. Don't stay stuck, do better. Kind of the philosophy. I've heard a lot of things with people saying, hey, you know what? I tried pitching fixed benefit. It hasn't worked. I didn't do a good job, or the customer didn't like it. That's fine. You weren't happy with it. Well, let's go through this. Let's see if we can pick a few things out of it. It'll be a quick one. And then, you know what? Try it. Don't stay stuck. Do better. The whole turtle philosophy there, right? So happy Monday, everybody. So if this is your first Motivation Monday, which there are a few people on the line, here's what we're going to go through. We're going to go through a tip of the week. We'll take a look at, then we're going to go through AHCP trends. We're going to take a look at who our sales leaders are. And let me tell you, we had some sales leading this week for sure. And in the end, we're going to end with a sales technique, which will be how to effectively pitch a fixed benefit policy. So to jump into the tips of the week, the tip of the week for last week, see if we can get it up and running, is the new NatGen effective date rules. There we are. So you can now quote on the 29th, 30th, and 31st for all of those products, including that short-term linking short-term, so the 3x3 there, or 3x2, excuse me, with a plan enhancer, critical illness, the dental products, the accident fixed benefit. So they're just trying to help you guys stir up a little more business and get up and running with that. So that was the tip of the week for last week. The tip of the week for this week, it's kind of one for you guys. It's the Medicare learning sessions that are starting. I'm here in Chicago with Tammy Stencil, who's our Medicare specialist, getting up and running for you guys to get the Medicare kicked off. So every Thursday this month, we are going to have some Medicare for you. We are going to be starting with Medicare 101. That is this Thursday. That is A and B. It's going to give you just some of the meat around the bones about what the A and B are. I know we all have a lot of learning curves going on there. After that, we're going to get into part D, then part C, because apparently D goes before C on that. And then at the very end, we're going to end with Medicare supplements and the benefits. Starting next month, then, we will have the carrier trainings. But if you don't know anything about Medicare, if you're kind of rusty, I'd recommend signing up for these. These are in the training section at ahcpsales.com. Make sure to register because we do have our seats limited to 100 per session. So I'll tell you, they are filling up kind of quick. If need be, if they overflow, we will get additional ones out. But as of right now, we have ones going on every Thursday, and they are hosted by Tammy Stencil, who's our Medicare specialist here at AHCP. So let's take a look at some trends. What are going on with here? So in the short-term medical, we had a huge increase actually in short-term medical. Really good job, everybody, with NatGen being about 80% of the sales. So we really had our abilities kicked up with that NatGen increase in the fixed benefit sales as well. So it's mixed between VBA and Foundation Health. So our leading products were an increase. So you're going to notice a trend. So we had an increase there in our accident policies. So really leading with the Healthy America and that plan enhancer. Plan enhancer kind of being one of our solids that we do through. With critical illness, leading with CBL. CBL was about 70% of the sales. Keep your eyes out. I know there's a few changes going on with CBL that are going to make it even stronger, which I know we love. NatGen, our critical illness there was growing. And of course, we had a consistent increase in dental. Since I can tell you right now, we do sell tons of dental. We try to sell dental on every policy possible. So those are the trends, just a healthy increase in everything, really leading with the NatGen in the short term, the VBA and the fixed benefit, Healthy America and accident, CBL and critical illness, and in the dental there, again with that NatGen. So for the sales shout outs, I'm a big fan of this. Katia again, leading first, 10 Foundation Health and 4 hospital expense. So good job, big shout out, applause there. Taking silver there is Jacob Gordon, and in bronze is Robert Swander. Good job, everybody, leading there in the limited benefit sales. I will tell you, that's kind of where the money is right now. So these people are, they're probably loving their paycheck a little bit. Let's jump to the short-term medical shout outs here. So taking gold, good job, Andrew. Kudos, kudos, kudos. Doing a really good job with the short terms. Here's the thing. He didn't sell the most quantity of short terms. He actually sold the most just raw volume as far as it goes with the premium. So good job there, Andrew. You actually had 4, but taking in second and third, both Katia and David, they had 6. So Andrew, even though you didn't sell the most, you sold the most volume-wise. Good job. Huge round of applause for you, my friend. So taking a look at what our tips are, sign up for Medicare, taking a look at our trends, which are all increasing, and our sales shoutouts with some really strong leaders, let's jump into kind of how to sell fixed benefit plans, right? So let's jump into this. So why do we care? You want to sell fixed benefit policies. I will tell you one thing about me if you don't know this. I actually did run a fixed benefit call center for a little while. So I know a lot about how to sell these effectively and efficiently. So first off, with why do we care? Short-term medical law changes happening, right? So we know that, and we know companies are trying to do that 3x2, but guess what? There still is that term. Customers are still getting that letter of, hey, what's going on with this policy? Why is it ending, right? Some states have rewrite restrictions, right? If you're in the good state of Missouri there, struggling with those, we have long-term benefit solutions. That's why we are taking a look at these fixed benefit policies. Right? Why do we care? First off, we're giving our clients, again, that long-term solution. They can have this with short-term. They can have this with major medical. This is one of the most versatile policies that are out there. There's great commissions on these, right? The commissions are fairly identical as what they are to short-terms. And the nice thing is, we're going to keep them, right? Our clients will actually keep them. They will have them for the 12 months. Yes, true, with the short term, they can keep it for, twice, but then you only get paid on the 6 months. This one, you get paid on the long term, right? And it keeps us ahead of the curve for changes in healthcare law, right? So what's going on? Major medicals under huge scrutiny, right? We know what's going on with Trump's trying to repeal the ACA, right? So that means major medical is going to change. Short terms are under the radar right now, which means short terms are even going to have more changes. This is just keeping us ahead of the curve. This is going to keep us on our toes and keep us ahead of everything, right? If you have not heard me say this before, we live in a cycle. Health insurance is a cycle, right? We had sold a ton of fixed benefit, then we moved to short term, then ACA happened and we did a ton of ACA, then the commissions dropped and so we jumped into the short term pool. Now we're back into the fixed benefit, so we need to make sure we're keeping up with it. Also, if you're keeping in mind with the circle, it means we're going to be back to major medical soon. So why do we care? Hey, guess what? We actually make money and these are long-term solutions. Why do our customers care, right? First off, it's less stressful and it's very inexpensive. In my mind, I like to keep the math kind of light and simple, right? So I'm like, okay, so major medical, short-term is about half the cost of major medical. Fixed benefit feels like half the cost of a short-term, really. So they are inexpensive. They are for the clients who are very budget conscious that just want to have access to the doctor, right? It's for benefits they can use and they can predict as well. One of the things running a retentions department we found out is if clients understand how the benefits work, they're actually going to retain the policy. On this one, guess what? If you can go through and you can explain exactly what they're going to expect when they go to see a doctor, when they go get a prescription, when they're going to have the kind of that big what if, they'll keep it, okay? And here's one of the fun things, right? So it's for people who can actually keep it when they start a new job and get coverage, right? So you say, hey, you know what? I'm used to selling short terms for that gap. Great. Maybe try to sell a fixed benefit for that gap. See it, because you know what? If you can tell your client, when you get your insurance, you can actually keep it. This will pay on top of what your major medical does, right? So you're going to have that stop with your major medical, but this can keep going. Huge, right? So why do our clients care? Because, hey, guess what? It's easy, it's predictable, and they can keep it as long as they want. So it's really portable that way. So in your head, first off to start with, we have leading products, right? So we have to think about it this way. First off, you're either going to pitch a fixed benefit as a leading product, right? So our leading products really are major medical, short-term, or fixed benefit. So think about it that way. This is the product I'm going to lead with. This is your main insurance, right? You can do it as a pairing product, right? So with pairing, it would be pairing it with a major medical or short-term. Or if you're going to think about it as a supplement, right? So it's going to be with the current work insurance. So you got to think about it this way. Either you're going to lead with it for a long-term solution, pair it with their major medical, or think of it as a supplement with maybe more of a group plan. It's going to kind of change the way that you pitch things. So with your pitch, as far as it goes with these, you need to be very clear on a few things. First off, and I'll go through a pitch for you guys in a minute, but you need to set clear expectations. This is not an ACA plan. You have to make sure that they know it excludes pre-existing conditions, that they get a set benefit amount per service, right? So here's one of my favorite things. So the plan actually I'm going to describe to you, guess what, doesn't have a deductible. People shut up and listen at that one. Hey, guess what? Your plan's not going to have a deductible. It's not going to have a coinsurance. What it does is actually it's going to give you a set benefit amount per service. Because let's be honest, they don't have deductibles, they don't have coinsurances, and they get a set benefit amount. Those are all factual statements. As long as my client knows, like, hey, you may still be subject to that fine. It's going to exclude pre-existing, just like short terms. They can use them for access to healthcare as well. So that's one of the things people said, I just want to have access to a doctor. Great, you're going to get a nice plastic ID card. It's going to give you a network. You're going to have access to that doctor. And that major medicals are better in catastrophic situations. I like to be transparent with my customers saying, hey, you know what? If the world ends, you break every bone in your body, honestly, a major medical is going to be best for you. But as we discussed earlier, you can't afford a major medical, or a major medical is not a good fit for some other reason. Okay. With fixed benefit pitches, there are 7 things that your clients will care about. It's going to be, hey, doctor, right? What happens if I go to a doctor? What's going to happen with my prescription, hospitalization, my network, my labs, my emergencies, and my maximum benefits? All good fixed benefit pitches will go through these, right? So let's go through a pitch and let's see how on my toes I am this morning. So this is what a pitch should sound like, right? So the plan I've chosen for you is the Foundation Health from National General. Okay, this is a limited benefit plan, fixed indemnity. Now that a lot of insurance talk, so let me go through what that actually means. So what this means is this plan will give you a fixed dollar amount per service when you go in, okay? This plan uses the multi-plan network, so even if you don't get a benefit for the covered procedure, you can at least use that network. So that's always a big benefit there. This is a huge network with around 850,000 doctors in it. So hey, let's look up your doctor. Bam, knocked out the doctor, knocked out the network. Always make sure to mention the name of your company, what it is, okay? Don't worry, there's more. Now, let's say you're going into your doctor for a cold. This is how this policy is going to work. So you call your doctor, you make an appointment, you show up, you hand your insurance card, right? You sign the benefits to your provider, meaning, hey, you know what, provider? Do all the work, right? So what's going to happen is this plan is going to give you $70 per person twice a year to go to the doctor, no matter what the cost of the doctor is, okay? So if you stay in network, you could get that discount. So this plan is going to give you the $70 with that network. Okay. So let's say your doctor is normally $100. We'll say that this network is going to give you a discount of 20%. So it winds up your doctor's $80. We're going to give you 70. You're responsible for that 10. Okay. So can you see how this plan is going to help you make going to the doctor so much cheaper? Great. Okay. So here as well. So if you're going in for a prescription, this policy does have a discount card, so you can see the cost of the prescriptions at your local pharmacy. But a lot of generic prescriptions are out there at like Target or Walmart for between $4 and $10. If you need to go get labs drawn, this policy is going to give you $100 twice a year. Again, that is going to be per person for your labs when you go in. Now, if you get into an accident, the policy is going to pay you $200 for the ER, just going into the ER, and $2,000 for each day you are admitted. So if you're there for 5 days, you get $10,200, okay? And keep in mind, you're going to be using that multi-plan network discount. So can you see how this policy is going to help you if you get in an accident? And this is when you start tying in your supplements, right? So you go into your accident supplement. Okay, so here's another thing, with this policy, we also added your accident medical expense that, when you go in for an accident, it's either going to pay you the cost of the accident or up to $5,000. On top of that, you're also going to get those fixed benefits from this policy. So you'll get that $10,000 plus an additional $5,000, just making everything a lot more affordable. And we're keeping this comfortably under your budget. Keep in mind, this policy has no lifetime maximum and can't be canceled on how much you use it. So that's kind of what a pitch would sound like. So it's quick, it's simple, it's easy. You hit all the main points, very conversational. You're going to see that we went through, hey, here's how your doctor works, here's how your lifetime maximums work, here's how everything works on this policy. Your customer is going to understand it. I would recommend, you can even do a screen share and walk through the benefits in the brochure if you'd like. Sometimes there's hesitation on that because your client can shop between levels 1, 2, and 3 if you're doing the Foundation Health, for example. I would lead with one, keep it kind of strong, walk through, go through a few examples like this. So that is kind of how a fixed benefit pitch would work. It's easy, it's simple, and it's kind of to the point. If you have any questions, you want a copy of it, let me know. Email training@ahcpsales.com. You can say, hey, Dan, I want a copy of that pitch. I really liked how it sounded. And we will get that out to you. And I thought we'd end with a pretty strong quote here. If we can get that quote popped up. Unless you try to do something beyond what you've already mastered, you will never grow. I will tell you that's where a lot of people are getting stuck right now. They're seeing their incomes go down because they're not pitching the fixed benefits, right? Either you need to figure out what the value is in for you or what the value is there for your customer, right? So again, unless you try to do something beyond what you've already mastered, major medical, let's say, you'll never grow. Thought we'd done with that pretty good quote. If you have any questions, concerns, or comments, feel free to email training@ahcpsales.com. If not, have a great Monday, everyone.